Hello and welcome back. This is David from the Personal Finance Squad.
Okay, today we're going to get into secured credit cards. These cards are designed for people with bad credit or no credit. They're really good for people, for example, who are from a foreign country. They may start living here or go on a work visa and need a credit card. Or a teenager who needs to establish credit. By law, you can't have a credit card until you're 18, but that doesn't mean mom or dad hasn't figured something out. In any event, this is a great way, again, to establish your credit. Now, if you've been in the penalty box for a history of not paying your cards on time, this is also very good for you. So these are the two scenarios where it applies. So the point is that the credit card company is going to ask for a few things from you before they allow you to have this credit card. Now, right off the bat, they're going to ask you for a deposit. And this money is going to go into an account. It's going to be an insurance policy for them in case you default on the payments when you actually use the card. So what we like to say here, this is kind of like a training program for the borrower. You need to prove that you're going to make payments. And if you do so on time or keep that balance off every month, then it allows you to build some credibility so that you can work your way into an unsecured card, which gives you much more flexibility in terms of having the ability to charge more dollars every month. So the process of giving money to them as a security deposit is going to be in the range of $200 to $300. And we're going to look down here and we're going to go to this flow chart and let's look at this in a little more detail. So we can see right here that their card is approved. And again, for that, they are going to ask for an annual fee in many cases. That could be anywhere from $59 to $99 a year. It can definitely vary, so you'd have to check. They need some money in their pocket because having the ability to charge $200 to $300 a month is not going to make them any money. So this number here is going to give them something to play with. Okay, now we talked about having it as a security deposit, and that would be $200 to $300, okay? Now we talk about the credit limit, which is usually predicated upon what the security deposit is. Now on top of that, when you charge money to the credit card, you're going to have an interest rate, just like a credit card is. Remember, this $200 to $300 is a security deposit. It's a blanket in case you default on your payments. So if your credit limit is, let's say, we're just going to call it $300 in this case. That's as much as you can charge, but if you charge any money to that, that's going to be subject to interest. But this $300 deposit right here has nothing to do with it. This money stays there until you cancel the card or they take your money to pay off the card if you default and any charges that you make. Okay? Here's the minimum monthly payment part. Just like a normal credit card, you would make a minimum monthly payment. So let's say you went to Macy's, for example, and spent $200. You don't have to pay that $200. You might be paying $15 or something, right? As long as you make this on time, you're going to be fine. They're not going to take any money from you, and they're showing that you have the ability, to make that monthly payment. But we would like to point out that being a squad member, we don't advocate charging on credit cards if you can't pay it off. So what we mean here is, yes, you can have a minimum payment made, but you're just collecting interest. We do not like interest-bearing things on credit cards. So just keep that in mind. Now down here, the last piece, we can see that you as a cardholder can cancel anytime that you want. And technically, the bank can tell you that we can stop anytime we want as well. In the event that there's any money left in the security deposit, if you cancel or if you fail to make payments, they're going to cover what's left over. And whatever is left over, you would get it back. We talked about this. This is the last piece here. We went through it already, but this is a reminder that you will have an annual fee. You'll have a security deposit, which is your credit limit typically, and your card will be canceled if you miss a payment. More than likely will be canceled. It's not a guarantee. But they don't want to mess around. They already know that you have bad credit, or if you haven't established that they can't trust you. So your goal is to do this for a good 6 to 12 months, and this means making payments on time. And what you could really do is just charge $15 no matter what, $20, something that you know you can handle, and pay that off every month, and it'll show that you're managing it. That's what they want to see, okay? So by doing that, it gets you the ability to get an unsecured card down the road. You can request that in this time frame, because not only what it does in terms of gives you the ability to have a higher credit limit, it also raises your credit score. And that's what's most important, because credit's not all based on the credit card. It's based on other things in life, like a mortgage, a loan for a boat, a loan for construction, loan for a car, all kinds of things. So It's other factors that play into it. So this can really help out your rating. Now, the other piece that you want to think about is while you're getting the card, ask the companies if they are reporting to the credit bureaus. There's 3 major credit bureaus, and you want to know if they're getting information because they're going to see improvements. And you want to know that if I'm going to go with this company, they're going to know that I'm paying off my card, and that will hence make my score go up, and again gives you the ability to borrow money at better rates. Okay, so that's going to do it for the secured credit card. We appreciate you joining, and we will see you in the next video.